targeting. So we have a target. We're looking for a draw on liquidity. It could be a new week opening gap that we're aiming for. It could be a fair value gap above the marketplace that we're aiming for if we're bullish. And that draw on liquidity is what we're looking for, a reach from that fair value gap that forms, whatever the fair value gap, the first one that forms between 10 o'clock and 11, that one, you're going to see that right there. That's going to be a catalyst for a minimum 5-handle run. The problem is you're not patient. You're impatient, and you're not going to sit still long enough to wait for that fair value gap to form. You're not going to have your chart annotated where the draw on liquidity is going to be reached for. So you're having all these indicators on your chart because you're looking for things to qualify and quantify and confirm something that my concepts don't require an indicator to tell. I'm anticipating before your indicator shows whatever the indicator is going to show. I'm already anticipating all that stuff before the candle's even formed yet that would constitute your indicator creating the setups that you're using it for. I already know when and how the market's going to shift before moving averages later on cross over. Like, I'm way ahead of the curve. My students are way ahead of the curve. We're in the future. When we're trading our chart, we're trading the future. We're entering on a future move that we have a statistical probability that is going to likely form and go to a specific price level by a specific time. And everybody else is waiting for their indicators to talk to them. I'm sorry. I'm tone deaf to indicators. I don't have any interest in them. If you find value in that, that's fine. But I'm not teaching indicators. I'm teaching independence from everything else except for open, high, low, and close and time. The lunch hour. The New York lunch hour is technically 11 o'clock in the morning to 1 o'clock in the afternoon, New York local time. So it's a 2-hour window. And the reason why is back in the days where we had open outcry and electronic trading hadn't really taken off yet. Sometimes if the morning session had a really nice move, guys would go grab a bite to eat because they felt like that we would have a very busy afternoon session. So they want to go early, beat the lunch rush to whatever it is they would go and run and get their lunch. Sometimes they would eat at their desk, and others would be just hopped up on goofballs and simply not leaving the floor and just trade through the lunch hour. But lunch hour trading is a real thing, and the algorithm operates on that mechanism of reversing back to whatever the session in the morning stops, wherever they're at, whether they're bull stops or not bull stops, buy stops or bear stops, sell stops or buy stops rather, buy side or sell side. And as an example, let's assume that we've watched the market go higher in London, and then we had a continuation in New York. And whatever the target is that we had for our weekly chart or our daily chart has yet to be reached. So we're still below it. Your expectation for the lunch hour between 11 o'clock and 1 is you want to go through and look for where a relative equal low or a 15-minute low is, because that's exactly where the algorithm is going to go. Don't take my word for what I just said. Don't just say, because ICT said it, I believe it. No, go back and look through your charts and you will see what I just said is algorithmically proven to you. It goes on every single week. It happens this way all the time. It does it all the time. It's flawless. It never fails. It's always in the charts. You can set your life around it as a model. This is one way that you can look outside of the AM session and the PM session and go right in there. Once you understand how liquidity works and what you're looking for, that could be your model, your setup. And I have done examples of that last year and this year, recording my entries. And you're buying those sell stops. As it runs underneath it, you're buying it. What makes it better? If there's a fair value gap or a volume imbalance just underneath that low, that right there is a unicorn. Why is it going to go down there? Because it's going to pick up more orders to allow smart money. It's not selling pressure. It's not a lack of buyers that lets the market drop. That's all the BS that's told to you in books and other authors and people out there that say, I've been in the industry. I used to be a trader at the desk. I'm a market maker. No. You're a trader with a religion. You were a dealer. They called a market maker. I'm talking about the mechanism that is the market, that was coded and brought to us as a price engine that causes the fluctuations in price. And then you chase it. Other traders, they chase it. They go in there, buy and sell after it. It will use that human psychology to know that there will be trades printed at the levels they want. When the algorithm's running, it's not going to go to some random level. It always goes to something that I've taught you as a PD array. It's always like that. But yet you dismiss it as it's buying and selling pressure. It's this. Elliott had a wave. It caught a wave. There was supply and demand, buying and selling pressure. It took it up there, down there, whatever. It was my harmonic platypus pattern. Something that, it takes more faith to believe in that than simply there's an algorithm that controls how far price will go. You have a belief and understanding there's a circuit breaker, right? The market goes down this much, they halt trading, and it has to be, a number of time. Interesting, isn't it? Time has to transpire, and the market needs to uptick before they'll let lower prices start. Well, what in the hell do you think that is? That's control measures. You think that they're going to let us, John Q. Public, Jane Q. Public, we're going to be able to wreck the markets and crash them if we want to collectively? Reddit folks thought that they were going to do that last year, didn't they? Woo! It didn't happen, did it? It did not happen. Sorry. But I told you that was not going to work. But they used them. They let them think that they were pumping it up. They bought it, and then they started selling it, distributing it when they were doing what? We're going to kill these market makers, and we're going to kill these fund managers, and we're going to put them out of business. No, that didn't happen. And they were laughing at all of you on Reddit. And I told you before it was going to happen. In lunch hour, that 15-minute low, when it's been bullish and we haven't hit that weekly or daily objective, it's going to roll down there. It's going to go right below that low. And it's going to engage those sell stops. And the market's going to be flooded with willing sellers at a low price. Why, pray tell, would that be advantageous? Because smart money will be buying those sell stops to reaccumulate new longs, add to or start new positions, and wait for that higher time frame, weekly or daily chart objective to be met. And then you'll watch the PM session roll through and reach higher to that target or get closer to it ever so slightly. That's that liquidity matrix. Understanding where you are in it. You have to know where the market's going to go. That's the first rule of Fight Club here. You have to know, where is it going? You have to know that. If you don't know that, everything else afterwards, you're lost. If you don't know where you are going, where the market's being led to, it's an obvious level. It's in your chart. And that's what I'm sharing my experience with. I'm pointing to those things. I'm hoping that you're aligning yourself with, okay, I'm going to submit this studying price delivery in the basis of it's going there, and filter out all the things that would be opposing that as an idea in terms of trades, accepting the fact that there will be fluctuations that you didn't participate in. That's okay. That's discipline. That's you sticking with a rule-based idea, and you're keeping your focus on what is the highest probable direction. The market goes up and down, folks. Up and down, up and down. But where it's going to ultimately, once it gets there, then you can look back and say, wow, yeah, I can see how it was obvious there. But I'm teaching you how to see the obvious real time. It's not easy for some of you. Others, it is. But most of you are going to find that it's very hard to do that because you want it to be easy. And I want to be able to make it easy for you. There is no other way to make it easier. You have to go through it. You have to condition yourself. You have to look for it to repeat over and over again within specific times of the day. So between 11 o'clock and 1 o'clock in New York local time, you're looking for a run on stops. What stops? The stops that have not been hit, and punishing those individuals that may have trailed their stop loss up below an old low or down below an old high. If you're bullish and it's been going up, a 15-minute low Underneath that, that's sell stops. It's going to run down there, take those, and then you're going to see it trade higher. Even if it fails and just goes to a higher high and never continues after that, that's still tradable. But some of you would think that that's a failure. It didn't keep going up to my target on a higher time frame chart, ICT, so that's a failure. Wrong. Could you get 5 handles out of it? And did you take 5 handles? That's how you start. That's how you build yourself up. That's how you grow. And eventually you do that enough and you start seeing setups that you know you've been here before. Yeah, I can get my 5, but let me take 5 off with half the position and leave a runner. And then you graduate to becoming a 10 handle trader. And you do the same thing for a little while. Let that build up. And then you start seeing, this looks like it's one of those setups that gives me a 25, 30 handle run. Let me take off half at 10 and then leave a runner on. And then you start growing into being a 25 or 30 handle trader. But you just can't make a decision cold turkey one day and say, you know what? I've done 12, maybe 15 paper trades, and I've done 2 of these 5 handle with my live account. So I think I'm ready for 50 handle runs. It doesn't work. It doesn't work, folks. That does not work. There's so much that you have to grow into and allow yourself to feel what it feels like to watch your profits go up and down while you're in those trades. I mean, you're talking about something that if you have multiple contracts on, you're likely to see thousands of dollars go up and down in unrealized profit. And the first time you encounter that, the natural impulse is I got to get out right now. This is stressful. All this extra money I'm making that I've never done before is stressful. I got to get the hell out of here. It doesn't sound possible, right? You should be thinking, well, this is great. This is going to keep making money. The first time you get there, it's scary because you don't want it to go away. You're afraid it's going to go back to zero or turn into a losing trade, which unfortunately in the beginning tends to happen for people that rush to that point. They haven't desensitized themselves to winning, because winning is something that you have to get used to. And it doesn't sound right, does it, hearing that? You have to get used to winning. I could get used to winning real easy. No, when there's money associated with it, it is a very scary thing, because now all of a sudden think about it like this. If you have a trade and you take a losing trade, then you lose, and you take another trade and then you lose, and you take a third trade. Now you're down maybe 5%. Now you have analysis paralysis. You second guess everything. And now you know that looks like something you would have traded, but I don't really want to take it. I'm scared. Let's just see if it works. Then it works, and you're thinking, oh man, I should have took that trade. Why didn't I take that trade? Because you have not grown in learning how to do this properly, and you traded too much. You lost too much, because 5% is too much for a new trader. You pushed yourself too far. So you have to let time heal it. That means take a week off. Come on, ICT, man. I'm never going to get to being rich if you keep talking about taking time away from the markets, taking this, taking that. You're not going to be successful if you think like that. You're the problem. You're impatient, you're impulsive, and you're reckless. And that can't be fixed by me. It can't be fixed by any other educator. And no product is going to fix it. No resource. No black box. No mentorships. None of that stuff is going to fix that, because you have a problem. And that has to be corrected by you. Over time, going back to square one. And a lot of people aren't willing to do that. And those same people will always and perpetually fail. In everything they do, no matter what approach they use to trading, they're going to fail, because they will not accept the facts that they themselves are presenting the catalyst for their failure. They're prolonging their development because they want to do it their way, have it their way, mentorship, have it their way, success story. Everybody wants to be a trailblazer. I get it, folks. I get it. They want to take something and make it their own and let everybody say, wow, here's your flowers, man. You did this and you did that. How about just making money? Who cares where you learned it from? Okay. Who cares how long it took you? Because believe me, when you start making $100,000 a month, you're not going to give a single fuck what anybody thinks about how you got there, how long it took. You're not going to care. Even your own time and pressure that you place on yourself will be completely insignificant, because once you arrive there, nobody can take it from you. Nobody can change your mind about what you've done, the decisions you made to get to that point. That's empowerment. All of you can get there, but all of you are the biggest roadblock. You're the barrier. You are. Time is going to be the same for every one of us, but you make it require more time because of the things and decisions and all the factors that you bring into it. Your toxic thinking, your doubts, you're trying to keep up with everybody else. You're trying to measure up to this one, trying to measure up to that one, instead of just simply thanking the folks that are making it available to you and using the advice and the conceptual ideas the proper way, not trying to reinvent the wheel. There's so many people out there trying to add to, twist the things that I've taught. And that's not what you're supposed to be doing. You have no idea what they're rooted on. You don't know what the logic is behind it. Remember, I had to take what is really out there that you'll never get your hands on. I had to create a language around it. So that way you can see it in a chart when it looks like this. But there's many times the things that create a breaker, you won't see that idea in the chart, but the same thing's happening. What? Yep. Dark pools. Another Twitter space for another time. So silver bullets, you have a fair value gap set up that's very specific in that 60-minute chart or 60-minute time window. 1 hour. At 10 o'clock to 11 o'clock, you have the lunch hour that runs on stops. Whoever's been making money, that's what it's going to do. It's going to run down there. Even if it reverses in the lunch hour, that's still a trade also. If you can anticipate that drop down, say the market's been going up, London session, New York session. Now you're entering at 11 o'clock to 1 o'clock an hour. You can sell short a 1 minute 2022 model and aim for that 15-minute low. What? Yes. Yes, Virginia. Yes, you can do that. That is a model in and of itself. What's wrong with it? Nothing. It might not fit your appetite. It might not feel like it's something for you. But honey, it pays. It pays the bills. It makes ends meet. And guess what? Car notes get paid with it. Rent gets paid with it. Mortgage payments get paid with it. Vacations get paid with it. Wardrobes get paid with it. Retirement gets paid with it. So what's your excuse? What's holding you back? Something's holding you back. And then you had the PM session. Afternoon. Between 2 o'clock and 3 o'clock. The same thing you would expect to happen in 10 o'clock to 11 o'clock AM session, silver bullet. Well, look what we have here. Another 60-minute time window. We have to look for stops or inefficiency. Where's the market going? Where's it reaching for? You know, you had that old high that you were aiming for all morning. It didn't get there. We have relative equal highs now across the afternoon. What's it going to reach for? The weekly and daily objective hasn't been met above the marketplace yet. So we're still bullish. Wait for a short-term shift in market structure, 1 minute and 5 minute. Wait for a fair value gap to form between 2 o'clock and 3 o'clock. And then when it drops down into it, when you're bullish, buy it and aim for that intraday high. If it can give you 5 handles, take it there. Leave a runner on and see if you can get to that higher time frame, weekly or daily chart. That's how you trade your afternoon silver bullet. Simple. Real simple. There's a whole lot more things you can add to it to supercharge it though. But that's the easiest, simplest little approach to that model being there every single day. Even in choppy days, it's there. Oh, it's there. Every day. Then you had the last hour trading. 3 o'clock to 4 o'clock. I've taught you several macros that exist in that hour.